Okay, in this video I want to talk about structures. So I'm going to start off by looking at no structure. So here are the facts that exist in this report that we're looking at. There are 2,235 facts. Let's see, document period and date. There's a fact. There's the information about that fact in XBRL syntax terms. Okay, this dialog box that I opened, it has the XBRL document from the perspective of the actual syntax of XBRL. So here is one fact. Here's the period start date, end date of that fact, and other information. And you can see any of this for any of the 2,235 facts. So here, there is no structure. You just have a list of facts. You can click on each one and look at the fact. Okay? So, but I'm going to close this. And now we're going to look at these facts. There's the same fact. Within the logical view of XBRL. Okay? So there are a number of different perspectives we can look at. Here you're looking at the Microsoft 2017 10K filing. I use this a lot for explaining things. And we're looking at one of the structures of that report. Okay? We're looking at the document and entity information. That's represented in this XBRL report using the network that is described here and the table. And you can see here in this list of all the components, we're in the component view of the report, all the different structures that are in the report. Now, this can be a little bit confusing to people because there's actually multiple structures that you can use. So first, XBRL has this notion of a network. And the reason when you flip over to network, the reason it flips over to the model structure here is because the network view, you really can't look at a specific network. You can look at an individual table within that network, but you really can't look at the network because if there are, say, two tables and the tables have different structures, different associations, it doesn't really make any sense. So you can break the report down using this application simply by clicking on a different view and viewing the components rather than a network. So a component is simply a network plus a table. So here's the network. There's the table, and the combination of the network and the table represents a structure within the report. Now, there's another view that is more detailed than this, and in this case, it's called a block or a fact set. The block and the fact set are the same because there's only one fact set represented within this table. So what I mean by that, I'll show you in a minute. But you can look at a report from this block view, and here you can see we have 194 blocks in the Microsoft report. So 194 blocks, 128 components, and 128 networks. The reason that the networks and the components view are the same is because every network has exactly one table in the Microsoft filing. Then the block view shows 194, which is way more, because there are multiple blocks within a table. So for example, the balance sheet, it has two blocks. It has an assets roll-up, and it has a liabilities and equity roll-up. So these two blocks make up the one component. Let me show you the income statement is made up of, in this case here, 4 separate blocks. So why do each of these 4 blocks exist? So first, this roll-up of net income loss is pretty straightforward because this roll-up goes together. The total and all the items that make up the total and the subtotals, they all go together. Okay? So if you remove this, then you have some other stuff left. Okay, we have the earnings per share hierarchy. The reason this is a hierarchy is because there's no mathematical computation. And the application figured that out because there are no XBRL calculation relations. There are no other relations. So by definition, this is just a hierarchy of facts. The same thing for the weighted average shares outstanding. This is a separate hierarchy. And this one that has no name is one single fact related to the cash dividends declared per share. Okay, so how do we get these 4 from the 1? So here's all 4 combined. You see the roll-up. That's all pretty straightforward. The earnings per share information, you have this abstract concept that contains these. You have this abstract concept that contains these 3. Although this is a different data type, so I think what's going on is it's taking these 2, putting them together in this hierarchy, and then it's creating a separate hierarchy. And because there is no abstract element, it creates a name and then puts this one fact in this one block. So here, this income statement is actually 4 blocks. So the reason that you have 194 blocks as compared to 128 components is that here the income statement has 4 different blocks. So you can see this better if you look at the model structure. So here you have the roll-up information, and now I know why this this cash dividends is a separate block. Here you have an abstract concept, that contains these 2. You have an abstract concept that contains these 2, but there is no abstract concept that contains this one concept. Now, to make this more clean, if there was an abstract concept that all of these concepts were in, then you can see that each of these sets of associations would be under an abstract concept and it would make it more consistent within the representation. So each structure is made up of a set of facts, and those facts are from that long list, but here they're all pulled in to this one fact table. They're pulled into the fact table because they're mentioned in this structure of the report. You can see the elements used in that structure. There's just a list of elements and then the properties of each of the elements. Here with then you have the rule results. So this is the roll-up information. It shows that everything is rolling up as expected. And it does this for each one of the periods. This is the actual calculation of relations. These are associations that represent the roll-up of net income. Net income is made up of income before income taxes and the provision for income taxes, which is made up of operating income plus other operating income expenses, and all the way down so that's the calculation expenses. So these elements, these validation results, verified, notice that that's green. These business rules, these facts in the fact table, and the model structure are all used, plus some common practices. For example, grand totals have double underlines, and subtotals have a single underline. And then the software application generates a human readable rendering. And this rendering is actually dynamic. You can move things around so that it makes more sense. You can also do what we're doing here, which is breaking the component structure into substructures called blocks. And the reason what a block is it's a type of an arrangement of each of these report elements into a pattern. We give that pattern a name, and it's just commonalities, and then you can leverage these patterns to represent information. And you see what we're doing here. We're verifying that all the totals and subtotals work correctly, and we're showing you that information within the actual rendering, as opposed to you having to go into the validation results here and see it. And this works similarly for every single structure in the report. So here you see the balance sheet, and it has an assets block and a liabilities and equity block. And so I've shown you statements for the most part, or that document information. You can do the same thing for text blocks or for the detailed disclosures, the level 4 detail for each disclosure. And it works the same way for basically every structure in the report. Again, rendering, model structure, fact table, business rules, validation results from the business rules information, and then the set of elements that make up the fact table. You can have, the reason that the fact table and the elements is different is because, see, you have two values for current and prior periods, but the number of elements is less. Anyway, that's an overview of structures.